Hello, my name is Jim Downs, and I am the founder of Blueprint CFO. And joining me on this webinar is Mitch Federman, the president of Blueprint CFO. Thank you for attending. We hope this will be a informative, but also interactive discussion about strategic planning and how to do it better at your company. And maybe you can share some tips with us of things that we don't bring up in our discussion that might be relevant to our audience. We're going to discuss, from our standpoint, what are the best practices in creating a strategic plan. And from my standpoint, I've been working as a fractional CFO for about 20 years now, working with over 200 companies, and very rarely do I see a very good strategic plan at a client. So it's really kind of a lost art. Most companies have a strategic plan when they first start out. But after a few years, it goes by the wayside. And it's super important to have a plan and goals attached to that plan, which you are measuring against whether you're achieving. And in Blueprint, for example, we meet every week and talk about our goals and whether we're on track or not on track. And so that's how much we believe in having a plan and sticking to it. So the first question, typically when I get a new client, I come into the company and I ask to see the strategic plan for the current year. And normally what I get is a sales forecast. So that's not a strategic plan. The strategic plan will have a lot of different components, and we're going to talk about what those components are in the webinar today. But one of the main components is that it's written down. It's not in the head of the entrepreneur. The entrepreneur thinks he or she has communicated the plan to his team, but it's all in their head, and they haven't really taken the time out to write it down. Because, by the way, it's going to change from month to month, which is also confusing. So you have to have a written plan that everybody has a copy of, that you've shared with your at least with your key management team, if not with everybody in the company. The second thing is our goals. Within that strategic plan are business goals, and it's very important to make sure that those are measurable and trackable. So measurable means quantified. Usually there's numbers attached to those goals. So it might be increase sales by 30%, or improve margin by 5%, or increase our bottom line by $100,000. So there's numbers attached to it that you can measure and identify whether you're on plan or not on plan. Next thing is your strategy is, if you have business goals, it also should align with the management team's goals. So a good example would be the head of the sales department. If you're shooting for a 20% revenue growth, then their goals should incorporate that goal in their goals, so that they're the one responsible for delivering that 20% growth and in sales. Another important thing is accountability. So many times we see where there is a plan, but then if we don't make the plan, there's no big deal because nothing happens. So it's important to people understand that if they sign up for a goal, that the company is counting on them to achieve that goal, and if they don't achieve it, it could cost them their job. I mean, that's an awful statement to make, but this is serious. This is business. This is business 101. If you're in charge of sales and you sign up for 20% revenue growth and you come back with 5%, you should expect that you either could have your pay decreased, you could lose your job, or you could be reprimanded. Some kind of performance has to be achieved in order to keep your job. But beyond that, what if you outperform the goal? There should be a bonus plan or some kind of incentive structure, we believe, to overachieve on the goal, or maybe even achieve on the goal, depending on how aggressive the goal is. So these are all important elements of a good strategic plan. We meet 2 days a year to do the annual plan, and then once a quarter for a full day to review the plan amongst the management team. And then we have weekly progress meetings where we talk about what's going on in the company that needs to be addressed. When we first started that, I thought that was crazy, that we're not going to be able to figure out what to talk about for 90 minutes every week. But the hour goes by and we still have way more to talk about than what we get to. So I know that everybody's busy and you're typically running around like a chicken with your head cut off, but it's very important to take time out and plan. And again, we need smart goals and clear KPIs. We'll talk about KPIs in a minute. So my view of business, and this could be viewed as a very elementary view, but I believe it's what I've seen in every single company. You need to have three things: strong sales and marketing. So that means you're able to attract clients, or you have clients and you're able to sell them more products and services than what they initially bought. They come back and buy more. Or and the next thing is operations. So now you have the order from the client for a product or service, and you have to have strong operations to make sure that the client is happy with the product or service that they receive. And again, that they will come back and buy more from you and be valued, loyal customers. But the third thing, which most people kind of don't pay attention to, is strong finance and accounting. Without strong finance and accounting, you really don't know if you're achieving your goals because your numbers aren't right. And again, we work in the accounting realm, and over again, we see companies where their numbers are way obsolete. They're doing their June financial statements in December, or they're doing everything on a cash basis, which doesn't really tell you whether you're making money or not because you're really not matching up revenues and expenses appropriately. So having a strong finance part of your business, we see it all the time where our clients will say to us, now we see where we're running our company like a tight ship. And so that gives them pride that things aren't falling through the cracks and that the company isn't paying for things that they shouldn't be paying for, or incurring costs that they shouldn't be incurring. So when we come in and look at a company and develop a strategic plan, we're looking at these three things. Where is the company strong? Where is it weak? You could be good, strong in sales and marketing, so you're bringing in all these new customers, but you're not so strong in operations, so they're not getting a good experience, and they don't come back. Think of an airline where you buy an airline ticket and you get on the plane and it's a bad experience, and you go, I'm never going to fly that airline again. So it's just a good example of where operations falls down, even though your marketing was good. Or you could have the opposite. You have strong operations, so you give a great quality experience to the customer, but they don't know about you because your marketing isn't very robust and they're not hearing about you in the marketplace. And then lastly, of course, is the finance and accounting. So why do a strategic plan at all? I mean, you could just make it up as you go along, which we don't recommend, by the way. But you want to focus on what matters most. So the strategic plan, what Mitch is going to show you is you can do it in two pages basically and cover a lot of data in goals and the objectives for the company. You need to ensure that your data is timely and accurate. So you don't want, like I said a minute ago, you want to see in, let's say, within the first 10 days of March, how you did in February. And when you get the numbers, they have to be accurate. You can't have people say, well, that's not really correct because it doesn't have all the sales in it, or something's wrong here because this doesn't make sense. Everybody has to buy in that the numbers are correct. And we create accountability through these measurable, trackable goals where we sit down and go through what were the goals and who is responsible for that, achieving that goal, and are we on track or not on track. Obviously, having a shared vision that everybody buys into and is engaged to actually achieve is important. Many times companies are assigned goals by the owner and they say, okay, boss, and they go back to work, but they go, wow, there's no way that I'm going to do that. So it has to be kind of a bottom up goal where the goals are coming up from the people and they say they can do that and they're committed to achieving those goals. Not kind of top down where you're given goals that really you're not really buying into. And again, the goals need to be measured. You can't say we're going to increase sales because who knows what that means. Many times we see that we're going to do better. So what does do better mean? What specifically are we talking about?
Yeah, Jim, and I think the most interesting one here is the accountability. It's kind of it comes along for the ride. It's not something that having a strategic plan just automatically comes with, but it's part of the process. So by following a process, it automatically starts to get your folks and your team members accountable to the rest of the group. It's an interesting dynamic, and we'll talk a little bit about that more later.
So one thing before we go any further, Mitch is going to dive into these next few slides. If you have any thoughts that you'd like to share with us or any questions, please enter them into the chat so that we have them in front of us when we get towards the end of the presentation here. Go ahead, Mitch.
Yeah, so one methodology of strategic planning is called an entrepreneurial operating system. It comes from a book called Traction. And we follow EOS, and many of our clients also follow EOS. And it really has these, these 6 real pieces of the system. So it's about vision, data, process, traction, and issues, and people. And really identifying and following through with each piece of this really allows you to have a strategic plan, not just a plan, but an effective strategic plan. And we'll go through some of this and some of the other slides, but a couple that are really important is the data. You need to, as Jim said, it needs to be measurable. You need to have a scorecard, and you need to review it every week. And these are KPIs or metrics that are really impactful to the business. The second is really the process, and that's what I mentioned. Following the process of the strategic plan, having your weekly meetings in a format that's called L10, and making sure that you have that meeting on the same day, same time, and follow that same format every single week. Also, traction, right? So with traction, it's about rocks. Rocks are, I look at them as quarterly objectives. What do we want to get done in a quarter? Who owns those? And what is the measurable that allows us to determine whether we were successful in that objective or not? Throughout the week in between the meetings, issues occur, and those get logged and reviewed during the L10 meeting. And of course, people is super important, right? You need to have the right people in the right seats that will allow you to row together in the same direction. And with all this, it really follows the vision. And the vision we're going to talk about, I think it's possibly the next slide, and how we define the vision and share the vision throughout the organization so that everyone understands where we're trying to get to.
Mitch, let me interrupt and say, this is where the typical strategic plan falls down because it does not have these elements in it. So you should have elements around improving your people side of your business, improving the data access or usability of data, improving your processes, dealing with your issues. These are all super important to be part of a strategic plan.
Perfect. So this is the first page of the 2-page strategic plan that Jim talked about. It's what we call the profitability roadmap, and it is completed by the leadership team. But as we talked about, communicated to all. At our organization, we go through it every quarter with the entire team, so they understand what management's working on and what's important to management, but also defining like the DNA of the organization, the makeup of the company. So with core values, right? We want to have people that want to be on the bus with us and think think the same way we do and have a similar mindset and way of life that they like to live. So core values is extremely important and is really identifying who you want to be part of the team. Then core focus, right? What is our purpose? What is our niche? What are our critical KPIs? Again, key performance indicators. Those are super important to measure. You define what are those KPIs that are most impactful to the bottom line, typically. So examples of KPIs could be like something as simple as gross margin percentage. It could be average dollar per client in revenue, number of deliveries in a month. But really, what are those important numbers to calculate and track for the company. Coming back to the 10-year, the pitch really is, what do we do? What do we do that's special? Do we have any guarantee? What's our process? What's our unique process? And then the 10-year target, 10 years is kind of hard to forecast, but it's really a directional statement. It could be a couple of sentences around where we want to be in 10 years, and maybe defining like a revenue target there as well. Other goals define 3-year checkpoint. What's the revenue we want to hit in our 3 years? And if we hit that, what's the company need to look like to get there? And any forward-looking trends. So just to consider as we're thinking about the 3-year checkpoint goal that we're hitting. And then page 2 is really around just zooming in to the 1 year, right? The 1 year is really one that you manage to right now with the 3-year in the back of your head. But what do we want at the end of the year? What do we want revenue to look like? What do we want profit to look like? What are those measurables? Maybe it's number of clients that we want to have at the end of the year. And then those goals or objectives for the year. We then break down the year into a quarter and identify, okay, for this quarter, what are our quarterly objectives? What are we going to focus on this quarter to help us get to our 1-year goal? And then any prioritized improvements. Maybe it's, implementing a new ERP system could be a prioritized improvement. But what are those important things? Maybe it's hiring a director of sales. What are those really, really important things that we want to get done during the year to help us achieve what we've defined as our revenue, net profit, and measurable goals? So Jim's going to go through
how does Blueprint? Thank you, Mitch. The next few slides are going to be how we walk our clients through a strategic planning process. I'm just going to suggest that we've done this where you bring in an outside person to help you go through the process, because sometimes you're blinded to your issues, and having a fresh set of eyes on your data and how you run your company is always a good thing. And so we start with an assessment when we get a new client, and that is, for us, it's a breakdown of how the company's performed over the last 3 years, and we're looking at the data in the income statement to see where good things are going awry or where things are going well. And we're also looking at the accounting department to determine if there's ways to streamline the processes and make the accounting department more efficient and reduce costs. The second part of our process is to do the profitability roadmap, as Mitch just mentioned. It's going to include the 3-year goals, the 10-year target, et cetera. And again, it's smart, because now you're telling your team, like we tell our team, here's our revenue goal for this year, but here's where we want to be in 10 years. And it shows them the bigger picture view of what you're trying to do as a business owner. The third part is the KPIs. And I love this slide because everybody has those words in their head, KPIs, but most companies don't know what their KPIs are. Even big companies don't know what their KPIs are, because there's all this data, and which one do you pick out as a key one that you should really focus on? I can give you many examples, but one example is manufacturing. One thing that can really go awry is overtime. So in our company, we do a monthly financial package with the client that shows them how they're doing on their KPIs, and always one of the ones is overtime and labor productivity. So looking at those things, if they're productive with their labor and generating more revenue with their labor, most of the other costs are fixed, and a lot of that money is going to drop to the bottom line. So going through the exercise of what's important to focus on. It could be scrap, it could be inventory turns, it could be accounts receivable collections. There's a whole bunch of different things that would be important to have as KPIs. And again, our team of 7 CFOs will work with the client to help identify what those are. Fourth part is the goals for the business, which is part of the profitability roadmap in effect, but also the team accountability for achieving those goals. So we're going to break that down further into which person on the team is going to be responsible for achieving that goal. And lastly, the financial meetings, which we hold for the client. It's a 1-hour meeting every month where we go through the prior month and identify how we did versus the goal, and whether we need to tweak the goal because maybe the goal should be changed because of market conditions or something that's happened. So it's important to do that, but because you're continuing your planning process. But the whole concept of this is, what I call continuous improvement, and looking at how we can have a stronger, more profitable company that's growing and is profitable.
So what kind of role does the CFO play in strategic planning? Well, you can see, the bullet points here identify a few, but some additional ones, really, the CFO could facilitate the discussion. It could help bring out from the other leaders what are KPIs in their department or their group that's important, and then help them to calculate those and continue to track them. Often, department heads have struggle with the data and trying to find the right data that's needed to calculate the KPIs. So the CFO can help to facilitate the weekly or monthly meetings, strategic meetings, as we're reviewing the roadmap and seeing how we're doing, if we're on track or off track. And of course, to help support the strategic plan would be supporting financials or projections. So to support the 3-year goal for revenue, it's important to have a financial model to support that and find out how are we going to get to that $20 million? What do we need to do? How are we going to, are we going to need new lines of business? Are we need new geographies? Do we need to have 3 more salespeople? And that's really a valuable tool that the CFO will create to help support those goals, and make sure that not only hitting our revenue goal, but hitting our profitability goal as well. So keeping an eye on cost and making sure that we know where we need to grow some costs to finance the goal, but also where can we cut costs so that we can improve our margins and get to the profitability that we're projecting and hoping to reach. And then the other piece is running, as I mentioned, the L10 meetings that we review and go through the blueprint, where we're at. Each person, each leader will talk about their objectives and how they've done in the week and where they might need help. And that's really where it starts to drive accountability, as leaders have to come in and explain if they're off target, why are they off target? And not to be shamed, but really just to ask for help. Like, okay, we're off target. Where can we help? Maybe you could use someone from another department, or maybe someone has been through that before and can help. So a lot of places that the CFO participates in the strategic plan and is really an integral part from the creation all the way through the execution of the plan. Just go over a case study. I have a client, a $20 million manufacturing company. When I started with them, one of the first things I did was join their leadership meetings. It was very ineffective. It was questions were being asked, and then there would be minutes of silence because no one really wanted to participate or answer the questions. There was no real structure to the meetings, and as I left the meeting, I just wondered, what did we just accomplish? It was awkward and didn't really push the goals and objectives of the business owner and the business. They had forecasts, but they weren't shared with managers, and they had no real direction. They had sales numbers, but no real direction on what the business would look like if we hit that, or how are we going to hit those numbers. So after implementing the strategic planning process and EOS, a small piece of EOS, I started slow. You don't have to boil the ocean here. You can start really slow. I started to introduce KPIs, scorecards. We started to introduce the L10 meeting format. And through that, we started seeing, a lot more participation, people coming to meetings with the data they were asked to come with, and starting to see revenue and the quarterly objectives get met. So it's been a really great seeing that evolution of this business, and of the leadership team, and everyone's really seen to gather around and help drive forward the business to meet those 1 and 3 year goals that were outlined on the blueprint. So why Blueprint CFO?
The Blueprint.
Go ahead, Jim.
Sorry, Mitch, I'm jumping in on
Go
your
ahead.
slide. Right. But Blueprint CFO is, our whole focus is the blueprint, what we call creating exciting futures for our clients. So you might think of a CFO as an accountant, but he or she is your strategic partner in helping you grow your company, having a plan, make sure you're standing on the plan, that you're managing your cash, you're not running out of cash because you have a plan and it ties out to a cash forecast. You have financing power that you can go to the bank with financials that make sense and get a loan, and that you're focusing on improving your profitability, and also somebody that can help you go through a sale of your business or even a merger or acquisition. I always like to tell my clients, as they're growing, the company gets more complicated, and that's where Blueprint CFO helps you deal with that by giving you data. And numbers don't lie. So that's very important to pay attention to your data and take time out every month to go through your numbers and make sure you understand where your costs are and where your margins are and where all your numbers are.
Yep.
Thank you very much. So is there any questions from the audience? I'll answer this one.
Yeah.
So it's I'll just say in general, it's very difficult to forecast, especially forecast revenue. We can say that at Blueprint CFO, it's difficult to forecast your revenue. So it's easier to forecast your expenses because you have certain labor and you have certain costs, rents, et cetera. But revenue is tricky. And so we look at our plan every month and say, are we on track, not on track? And if we need to pivot, we can do it then. Another sign that you need to be thinking about pivoting your strategic plan is if there's things going on in the marketplace that you didn't expect. A good example would be the Trump tariffs that are now being bandied about. If those actually go into place, it could have major impact on certain businesses, and that needs to be incorporated into their strategic plan. But that's all new information that just came out. Mitch, do you have any thoughts?
Yeah, I do. So, that's one reason why we have the quarterly meetings, the full day quarterly meetings. It allows us to assess, how that quarter went. Are we still tracking? Are the goals and the strategic plan still relevant to the business, or, based upon results, or based upon new things, new information? And then the annual planning meeting, which is again a 2-day offsite. That's another place to really assess, are we striving for the right things still? So good milestones to pivot if needed, based upon just new information, new things in the economy or in the business that will dictate that pivot. Any other questions? Finding it challenging to get full team alignment. Yeah, I think Jim, I'll just mention one thing here. I think that full team alignment is just really important. So we talk about this L10 meeting, and during the L10 meeting, it is where the accountability and alignment starts to grow. And it's important to push that L10 meeting and meetings like that, where each person in the organization has an objective. So the best way to roll this out is really to start at the top level and have your leadership team start with their quarterly objectives, and then start pushing that information down. Everyone understands, but then have L10 meetings with different, with each group, so that objectives for that group are defined and people own each objective. So at the end of that process, every person in the organization will own a objective, a quarterly objective, which allows them to see how their contribution rolls up into the greater good of the organization.
That's a good question. So gut instinct. I mean, when does instinct come into play? Well, I'll say gut instinct comes into play when you think you have a great idea, but there's no data that supports it's a great idea.
Right.
I'll give you a great. I think my number one example is the minivan. When Chrysler invented the minivan, there was no data to say people are going to want to buy this vehicle, but yet it ended up being a top seller. There's many examples of it in the auto industry where they came out with something brand new that nobody's ever sold before, and it ended up being a superstar hit. Now, there's other examples where they came out with cars that were similar, but they did not go anywhere. So, but gut instinct is always important, especially if you're an entrepreneur, that you see a vision for something that is new and bright and shiny that has never been done before. I mean, that's the basis of the American dream.
Yeah, I think the interesting thing about that question too is I think financial data can support your gut instinct, but it also can do, what Jim said, and that is like the data. There may not be enough data, so you just have to go with it. But often data will support it, and sometimes once you're looking at the data, you start to get a gut about the strategic direction based upon that data. So it's a great question, and I think everyone has to just really understand, how their gut works in reality. So some people have a really good gut feel, some people do not. So just know where your gut is, and then use the data to help support that. All right. Any other questions?
Yes. So just to wrap it up, you can find out more at www.blueprintcfo.com. And on there, you will find our contact information, Mitch's bio, my bio, everybody in our company is up on our website. We believe in full transparency of our team. And we have some, use the word rock star CFOs and accountants out there wanting to help you with your business and help it make it more successful. So check it out at www.blueprintcfo.com. And thank you very much.